Now, for this panel session, we're taking a look at the landlord's perspective and asking, in a rapidly changing retail landscape, how are landlords adapting to evolving tenant needs, economic challenges, and sustainability imperatives? Now, our panel of landlords are Samantha Bain-Mollison, Laura Thursfield, and Toby Tate. Samantha is head of retail at Places for London, TfL's property company, which has 5,000 acres of land across London and is one of the capital's largest landlords. Laura is retail leasing director at the Crown Estate. Laura has 16 years experience dealing exclusively in the London retail and leisure markets. And Toby is director of asset management at Hammerson. Toby is the director of Hammerson's UK portfolio, which comprises the Birmingham Bullring, Grand Central Shopping Centre, the Oracle in Reading, and Bristol's Cabot Circus. Welcome along, guys. Thank you very much for joining me here today. Now, as before, there'll be a short Q&A session at the end of this debate, so please feel free to ask some questions. Be brave. They were very shy in the first session this morning, but we warmed up in subsequent panels, so please do feel you can ask questions at the end. And please turn your mobiles to silent if you've not already done so. Thank you. Okay, so let's make a start. Sam and Laura, you're both landlords at Places for London and the Crown Estate, respectively, but I believe you worked together before in different guises. Sam, you were at Shaftesbury, is that right? Yeah. And Laura, you advised Sam when you were an agent, I believe at Hanover Green, is that right? So Laura, what's it like to go from being an agent to being a landlord?
It's very different. Enjoy both sides. I think the bit that I miss about being an agent is your knowledge of the whole London, everywhere. You know, what's going on, you know, who's opening where. On your landlord side, you're very focused on your area, and sometimes it just feels like you don't get out of that, your little bubble. But both have sort of positives, negatives. Yeah, it's a great place to be.
I mean, you're in the position of power, right, as a landlord?
I don't think it's a position of power. I think it's a great place to be, to see what's going on. You know, we are very privileged on the estate that we work in. Looking after Regent Street and St James's, it's on a world stage.
Yes.
I don't think it's power, though. I think as the world has changed and adapted, you know, when we're talking about our retailers, our restaurateurs, it's all about customer working together and that partnership approach. So it's got to be the right fit for both.
We'll come on to that because I want to explore that a little bit more later. Sam, how does it differ being a landlord at Places for London compared to Shaftesbury?
Is this working? Yeah.
Yes.
Oh, I can't hear it properly. It's crazy. I looked after 16 acres before, right in the heart of central London, and now look after 5,500 acres of retail across all of the London boroughs, which is really exciting. I think people forget that Carnaby, Soho, Seven Dials, Chinatown, 20 years ago were not what it was today. And I have got the fabulous position of looking at Places for London and thinking we can take this to another level in the future, because there's a huge opportunity there to improve the estate and invest in it. And that's what we've been doing in the last 2 years since we established Places for London.
Cool. Toby, I believe you've always been a landlord, is that right?
It's not as boring as it sounds. But yeah, I've that's been my career so far. So with Hammerson, they're almost coming up to 10 years actually.
Wow.
So yeah, and look, you referenced power earlier. I certainly don't see it like that. It's a huge responsibility. You know, the places that, as I've just touched on.
It was tongue in cheek.
Yeah, well, exactly. But we have a diverse crowd here, so I think important to reference the fact it's not power. It's a responsibility to create great spaces.
Okay, so let's look at adapting to shifting demands and what are the key trends influencing leasing strategies and how are landlords meeting new tenant requirements in a post-pandemic world. Laura, let's start with you. The Crown Estate obviously is in a unique position, isn't it, as you mentioned, owning entire sections of the West End. How do you leverage this in your decision-making, sort of long-term versus short-term, etc.?
I think to answer that, it's super important to look at who the Crown Estate are. So whilst we're a private company, we are publicly governed. Our tagline is for the nation's future. So every decision, everything that we do is about making the right decision financially, socially, environmentally today, but for future generations. So the estate is wonderful. We can look at it holistically and we can take the right time to make those long-term leasing decisions. So we're always, when we're making those decisions, it's what's the impact, what's accretive to the portfolio, what's that brand going to bring, footfall, spend. So it's very varying and very wide.
And you're on the international stage, let's be honest. I mean, you are a destination in the West End, and it's got to be right. The tenant mix has got to be right. The look has got to be right. What's the secret sauce behind Regent Street's appeal to international investors, do you think?
I think it's a multitude of things. We are very fortunate in the physicality, the location. So Oxford Circus, Piccadilly Circus, we have a footfall of 72 million visitors per year. We see it as an ecosystem. So residents, office workers, retail, that ground floor plane. It's a destination for retailers looking to expand globally. You know, the eyes on those stores, it's vast, it's huge. So I think it's a number of things. I can't put it specifically as to one thing. The architecture, you know, John Nash's vision, it goes on. But we are very careful in how we curate and making sure that every brand that we put into Regent Street or St James's, it goes back to that word about being accretive. What are you bringing to the estate that we don't yet have?
Okay. Sam, what are the key trends influencing your leasing strategy?
I think everyone knows that for a long time now, consumers have been seeking experience. I think that the cost of taking space is very high at the moment, and I think that means that there's opportunities for big pop-ups to come along and make big splashes, or one-off concept stores, particularly in the West End. An example of that for us, which is highly unusual in our portfolio, is Future Stores, which I don't know if anybody's seen, but it's on Oxford Street, right by the Elizabeth Line entrance. And as an example, they do short-term tenancies to brands that are looking to advertise their brand. And almost every time I'm dragged up to Oxford Street to have a look at what they're doing. So, for instance, they had Tesla in the store recently. So I went up to sit in the Cybertruck, and there were queues out of the door and everyone taking photos and then uploading it onto Instagram. And I think that's the kind of thing that consumers are seeking all the time, particularly in the likes of Regent Street and in the West End. My portfolio is very different to that now, because we're looking at transport hubs. So we're dealing with consumers who are travelling to those experiences and needing services. So we have to think about the journey and where they're coming from, where they're going to, and then who those people are. And one of the opportunities I think we've got is to think more carefully about the data, the insights of every single station, every single location that we've got in our portfolio. Think about the local community and the neighbourhood, and then speak to that with the tenant mix. So it's not a cookie cutter approach each time.
Excellent. Okay, so tenant mix obviously is really important. It's very key at stations.
Yep.
Toby, what are the key trends influencing Hammerson's leasing strategy?
So our portfolio is obviously quite different to my peers on the panel here. We have we're in 5 landmark cities across the country with over 100 million footfall, and within a 60-minute drive time, 23 million people. So For us, we have at Hammerson, we think about three key structures. One being cities as engines of economic growth, and obviously that proximity to such a large portion, over a third of the population, is key for us. Secondly, we're really focused now on the unified commerce. Unified commerce, we're beyond multi-channel now. So, and look, there are retailers in the room who will have a far clearer eye on that than we will. But I think there's data now that tells you over 80% of transactions in some way, shape, or form will touch a physical store. So it's really critical. We need to be able to respond to retailer needs in the right locations to provide the right space for them as they want to expand their physical footprint across the country. And then the third pillar, sort of allied with that, is flight to quality. And I think it's Collier's research that will tell you if a retailer can position themselves in 40 locations around the country, then they can touch quite quickly and easily, not literally, 80% of the population. And so that therefore means that retailers need much less space than they have done in the past. And as we look at our portfolio, it's ensuring that we're invested and continue to invest in the strongest and best locations that will attract as much of the population as possible, and as well for those retailers to give them that physical presence in those key locations. So that's how we think about when we're talking. And I think we've got some great examples recently, obviously with Sephora in Birmingham and Boring, Uniqlo as well. As they embark, obviously London first in many cases, where we do have a significant holding in Brent Cross in London, but then beyond in the regions, we see ourselves as a prime next step out of London for many retailers.
And data's king, really, isn't it? I guess for you all. How do you incorporate data into your decision-making processes on a daily basis? Laura?
Data and insights, it's absolutely critical. So we put on lots of resources, lots of data points, and we use that to inform our leasing decisions. And it's something that our business is very, very key. We must be using the right kind of data.
Absolutely. And Sam, I guess the same.
Yeah, we have a wealth of data about footfall, for example, going through stations, but we probably haven't got enough data of the type that I would like to see, which is more about the surrounding neighbourhood and where those people are coming from. And I think we can do more there. I think when I was at Shaftesbury, we were pulling on credit card data and looking at patterns and hours that people were shopping and what was happening in the morning versus the evening and when were the peak times. And yes, that completely informed our tenant mix decisions, but we're not there yet with Places for London. I think that's one of the things that's key to the retail strategy going forward, because I think, like Laura said, it's key to making decisions. Although I do have to say you have to be wary, because you still do need to take risks every now and again, and sometimes the data points you in the wrong way to say you're not going to take any risk, and I don't think that's the way to make an exciting portfolio at all.
Absolutely. And also in the property world, getting out and seeing people and having those face-to-face meetings are still really key, aren't they?
100%. Yeah. I think that relationships are the backbone of the retail market. And I think we want to have the best relationships with our customers, by which I mean tenants. And I know they want to have that with their own consumers. We did a survey recently in Places, and it was saying that 95% of our tenants now know exactly which property manager to call when there's a problem, and I think that's the kind of response that we need. We have to treat landlord as a service, and so we have to know the tenants inside out. But likewise, we've got amazing agents who work for us who are always speaking to the tenants. We've also got huge amounts of stakeholders across Places in Places world. We've got politics playing a part. Need to work with the bids, need to work with other different areas to make sure that we're all bringing together to make sure that London's the best that it can possibly be. And so I think relationships are really key to that.
Absolutely. Now, moving along and looking at balancing profitability and sustainability, how are landlords incorporating ESG in their property management and development plans? And what role do these initiatives play in attracting tenants? Toby, according to Hammerson's ESG strategy, it's got a commitment to being net zero by 2030.
That's right.
Realistically, is this achievable?
It has to be, and it's such a broad topic. a net zero target is one thing. We have a sustainability linked bond, a 400 million bond with specific targets set out, which helps inform and gives confidence to the market that we are going to achieve that. But at a more fundamental and basic level, I think when I joined Hammerson, if I'm being honest, we had actually had a net positive target. Which, what does that mean with respect to my own employer? But we're now in a position where net zero, we have a very clearly defined bottom-up, asset-by-asset strategy with projects set out, and coming back to your point on data, everything being measured in every single destination that we operate to track performance. So since versus the 2019 baseline, we're minus 43% on CO2 emissions. Last year, we were minus 9% in the UK versus 2023. We've invested through those, what we call them, net zero asset plans for each destination. Over the last 2 years, we've invested over £10 million into our destinations. And we've got another 10 million to go in the next 18 months. And that, I think, a really good example, let's take lighting down in West Quay in Southampton. So we're, as a landlord investment, putting in 3.7 million to redo all the lighting, and that's actually generating a saving over £400,000 for occupiers. So a 17% yield for our occupiers ultimately at our initial investment. So I have confidence that each asset has its own plan, and that's for carbon emissions. We also have nature asset plans. We have last year we delivered over 267 social projects with a combined value of 3.5 million. So as a listed business, obviously there are a lot of requirements of us to disclose all the activities, and if you have a lot more interest in that, I'd really encourage you to read our full year annual report. It's very thorough. But absolutely, we take it extremely seriously. It's part of every leasing decision that we take. And my ask of retailers in the room is, last year we only received, I think collaboration to get there, we're going to need collaboration with the occupier base. We had 27% of our occupiers last year willing to share their ESG data with us, consumption and so forth. But however, that's 170% increase on the year before. So we're making good strides, but still only a quarter of our tenant base is sort of forthcoming with that information. And so, we're investing huge amounts into our site teams, into the way we collect that data, and we think actually to achieve those targets, we have to work together, as we do in many other facets of the day-to-day operation of retail property.
Would that be a particular challenge, do you think, that kind of that side of the ESG agenda for you going forward?
I think it's a huge opportunity. I mean, I know that's the duality of challenge and opportunity, but if there was a lot more welcoming transparency and a willingness to share, we have a huge amount of data as the property owner. We're very willing to share that, and we do share that with our occupier base. So it is a huge challenge, but something we relish, and we'd invite and welcome any conversation with all retailers to make sure that we can share information that, in line with government mandated targets, we're all required to work together towards.
Perfect. Sam, tell us about any good sustainability practices or initiatives you've introduced to your estate.
Yeah, we are trialling 3 fit-outs at the moment: Baker Street, Barbican and Leytonstone. Those will have net zero carbon fit-outs, where we're focusing on delivering a variety of different methods, and then trying to find some retailers to use that space in a sustainable manner. So that'll be the next project that we're doing. We also embed we've got a London lease. So we ask all of our retailers, when they come to us, to sign up to paying the London living wage, which we think is really key in this day and age to act in an ethical manner with your staff. And we also have programs for our tenants. So things like we had a partnership with Heart of the City, where 40 of our retailers partnered with Heart of the City and did modules to learn all about any missing business skills that they felt that they might identify, and offered them modules and help and online learning to be able to give them the skill set that they need to be able to run the business. Because Places for London's got, like I said, 95% SMEs. A lot of them need hand-holding and need to understand how to run a business and do ask a lot of questions, and we need to be there and be able to respond to that in the right way.
Yeah, absolutely. Laura, did you want to add anything from a Crown Estate's perspective?
I think something that we've learned getting closer to our customers, actually coming out of COVID, was one of the biggest issues for our retailers was actually around recruitment.
Right.
So since I think 2021, we've been hosting recruitment fairs across London and across our regional portfolio as well. It's been a great initiative. All of our customers have been hugely welcoming of it. As an example, at our last fair, we had 20 brands attend. We had 1,800 applicants who actually attended the day. And I think there were 800 interviews on the day and 300 further second round interviews. The recruitment event is happening again next month, and we've actually signed up other London landlords. So slightly different take on the answer, but something that we've learned getting closer to our customers.
Good to reach out, definitely. With changing market conditions, how are landlords maintaining vibrancy in their spaces while managing rising costs and economic uncertainty? It's a delicate balance, isn't it? Laura, how do you or the Crown Estate work with retailers to let them be creative with their spaces and strategies?
I think one of the best examples that I can point to is we had essentially a pop-up restaurant at 10 Heddon Street, which it was a revolving restaurant space. So we had fitted out the unit as a restaurant. And Fallow were one of our occupiers. After a 9-month pop-up, they've actually gone on to open a full restaurant in St James's Market, and it is absolutely incredible. So from, startup, we've helped that occupier grow, and that's not the only example. We've also done it with Shackleton, an outdoor brand. They took a pop-up with us, came back 18 months later, and they've taken a long-term store with us. So it's getting in those kind of startup incubator opportunities and helping businesses to grow. Yeah.
Sam, cost of spaces in places for London spaces compared to other locations. There's huge potential for higher turnover at stations, isn't there?
I mean, I think this is one of the things that is key to letting people know about our estate is we have hugely successful retail in all of these stations. The retailers that you see as you travel into town, you're passing by them, and there's multiple sites for each one, and that's a demonstration that each one of those sites is successful. And so, call out to if there are any other retailers that would like to take space, then I'll be cheeky and say, please come and talk to us, because we do have spaces that are available, and we have a huge range of different rents and obviously loads of different locations. And we are trying to be very creative in a number of locations. So do speak to our team or speak to Cushman & Wakefield, who are our leasing agents.
Sure. Toby, I'm sure you have a perspective on this from Hammerson.
Activation is absolutely key for us, and I come back to the data point. So last year we did a deal. We brought Sidemen into the Bullring, and we were under embargo. We could only announce it 1 hour before they opened. Also in Bullring, sorry, just to sort of front end this story. Also in Bullring, we've invested heavily in our AI technology, and obviously that's emerging, but it's a sort of a footfall intelligence software. And so we announced it, and then all the Sidemen, I'm going to say all of them, because I'm pretty sure it was all of them were there. They all turned up, and within 1 hour, we had over 3,000 people in the space. Over the first weekend, we had an additional 80,000 people in the centre who'd come through. We now have a sort of a digital representation of our entire asset, starting at the Bullring. That's something we're rolling out across all our destinations. So we had an 80% increase in footfall on that first weekend, and we were also able to tell that 80% of those 80% were less than 40 years old, so bringing in a much younger customer, which is absolutely key. And we know that the Sidemen store on its opening weekend had a capture rate of 29% versus its immediate peer group, sort of well below that. So driving that buzz and excitement through launches like that. But last year we partnered with the Olympic Games. We had a third of the official fan zones across the country at our destinations. We had the first late night out DJ in partnership with Gadio at Bullring. That was a late night event on our malls. Every year we partner with the Birmingham Weekender and the Arts Council in Birmingham, where we host a big event. So I think retailers are looking to us to provide and invest into different reasons for people to visit, particularly when times are a bit tough. But I think tough is the new normal. There's no plain sailing, and I think we're really cost conscious. And I think at a very basic level, we've saved over £2 million in our service charges versus the 2022 baseline. So there's all the fun and exciting things and vibrancy that we can commit to that helps promote all of our destinations around the country. But more fundamentally, at a pounds and pence level, it's cost saving as well.
Yeah. Now, I'm aware that we're whipping through these questions and we've literally only got a matter of minutes left. And I want you guys in the audience to have a chance to ask a question or share some thoughts if you'd like to. So would anybody like to ask the panel a question at all? We have a roving microphone. Anyone? Yes, chap down here, Ben. If you'd like to stand up and say your name and where you're from, please.
Hello, I'll go first. Lawrence, the art creative. Could you each speak to probably your biggest challenge on your desk right now?
And who would you like to direct that to? Anyone in particular?
I'm looking at Toby, so you go first. Yeah.
So what was the
biggest challenge on your desk right now when it comes to...
biggest challenge? I mean, there's a lot going on. I think it's getting big deals done. We're going through a huge amount of repurposing across our portfolio. You look at the Oracle, you're over 40% of the floor space there is under redevelopment. Bristol as well. We're partnering. We've obviously announced M&S and the Odeon Lux coming in. So biggest challenge is probably delivering our capital investment to support the repurposing, the reimagination of our city centre destinations at the pace that we need to. And I think that's we work really closely across all teams to achieve and deliver that.
Does that answer your question? Okay, anybody else? Yes, chap, would you like to stand up and say your name and where you're from?
Jonathan Silver from designers Silver & Co. Fast forward 5 years from now, what are we going to see that we'd be surprised to see in each of your places?
Could you say that a little bit slower, please?
Yes. Fast forward 5 years, what are we all going to see in your centres and your locations that we haven't seen before? Not so much brands, but ideas.
Okay. Sam, would you like to answer that?
I would like to see all the plans that we've got in place having been delivered, which actually is one of my key challenges because obviously working in the public sector, things take a little bit longer. Baker Street is a key station for us, which is the oldest underground station in London. It was built in about 1850. It's still got I think it's got the highest number of platforms, about 13 to 14 platforms. And when you go to that station, you don't feel like it's worthy of the Baker Street, which is a global name, associated with the Sherlock Holmes, associated with all of the tourist attractions around there, like Madame Tussauds, and you've got, London Zoo, got Regent's Park behind you. To me, if we haven't achieved a nice public realm scheme out the front of that and changed the face of that station, I think I'll be severely disappointed with myself and all the rest of my team.
No pressure. Laura, how would you take that from a Crown Estate point of view?
I think it's $1 million question. I think we're constantly looking at the future. What does retail look like? It's safe to say that it's going to continue to evolve. We always say we can only look at what's just in front of us, but have an eye on the future of retail. So I think the health and wellness, I'm very excited to see what Westfield are doing at the Village. I think that kind of personal healthcare is only going to get bigger and more, and we're looking on our estates where we can put that in. But yeah, I think it's I don't have the answers, to be honest. I probably should.
We all need to go out and buy collective crystal balls, do some games. Listen, guys, thank you so much for a really interesting discussion today. I've got loads more questions. We could go on and on, but unfortunately, we've run out of time. So we're going to have to end it there. So a huge thank you to Sam, Laura, and Toby. Now, we're going to the next and final session is going to be here in 10 minutes time, actually, where we're going to be taking a look at this being the perfect time to capitalise on the positivity of the high street and what a changing narrative means for us all. Exciting stuff. So do join us then if you can, and thank you very much for joining us this afternoon. Thank you.
Thank you.
Thanks.
Yeah.
Thank you. Thank you.